first key, and we talked about the financial education, is people are waking up to just, hey, I should have an inflation hedge asset in my portfolio, right?
Absolutely.
There's a bucket there. I got to have it. The way that I talk about it is each individual person, so age, income level, goals, all the optimizations are really hard to kind of give, one size fits all advice, right? Obviously. What I do know is the zero exposure to Bitcoin is the wrong answer. So I don't know if it's 1%, 5%, 10%, right? Each person's different, but getting off 0% is really, really important, because what it does is gold and Bitcoin, while they both serve as inflation hedge assets, Bitcoin has a very, very different return profile, meaning that it's much more asymmetric. So right now, if you look earlier this year, right, remember the volatility works both directions. So when equities drew down 30% in March, gold was down 12 to 15%. Bitcoin drew down on one day 50%. I mean, it's just nasty, rip your face off, right?
Yeah, dude.
Now, when we go the other direction and asset prices increase, Bitcoin's the best performing asset. So Bitcoin's up like 45% year to date, right? Gold's up about, I think it's 15 to 20%. Right. Equities are, flat to kind of single digit positive in some of the indexes. And so what you start to realize is if asset prices are going to go up and the Fed's going to continue to just inject trillions of dollars of liquidity and kind of all this macro stuff happens, you just want to have exposure to the most asymmetric asset, right? So I don't think Bitcoin will ever go to zero. So your downside may be, again, 20, 30, 40, 50%, whatever it is. Okay. But your upside is hundreds of percent, if not thousands of percent. That brings me to, here's the most important thing you got to know about Bitcoin, the halving. So if no one's explained this yet, there's something called the Bitcoin halving, right? And I'm going to tell you why this is important. I publicly, in December of 2018, came out and I issued $1 million. My partners and I issued $1 million challenge to any manager on Wall Street. They could pick any asset, any individual stock, any asset for a decade. Bitcoin will outperform it. $1 million goes to charity. Knock yourself out. Not one person took it. Here's why. Because the Bitcoin halving is a programmatic decrease in the incoming supply. So imagine if in 2008, when gold went down 30%, the government steps in, they printed a bunch of money, everyone ran to gold. It went up 200%, hits an all-time high in 2011. Imagine when everyone ran to gold, if 50% of the incoming supply of gold got taken out of the market. So 50% of the miners just shut down. Of course, the price would explode, right? Yeah. That's what happened with Bitcoin. So in March, liquidity crisis occurs. Government steps in, starts printing money. Everyone runs for inflation hedge assets, Bitcoin being one of a bunch. In early May, there was a drop from each day 1,800 Bitcoin being created to now each day there's only 900 being created. And that happens every 4 years. So that'll go on for 4 years, 900 a day get created, and then it'll get dropped to 450 after that 4-year period. So programmatically, what you see is you're actually making the asset more and more scarce over time. But it just so happens that this last one occurred at the exact macro environment where everyone's rushing for inflation hedge assets. And so I actually think Bitcoin's price is going to top $100,000 by the end of next year.
See, I have to say, I'm not going to disagree with that. And the reason why I've been focused on it, and I'm glad you give me the education on it, Stan Druckenmiller is a friend of mine, and he's a great investor, though he is a Steeler fan, which then causes complications. Although I have Juju Simon and Schuster there. I always call him Simon Schuster, like the book company. But here's the problem. He said yesterday that in 3 to 5 years, we're all going to have to pay for what the government did. And my friend Joe Kernan asked me that, and I said, I have been so possessed by that because I know that we're going to get hurt. So when I go to my inflation handbook, what it says is buy gold, buy masterpieces, and buy mansions. Those are the three things that's it in my age. Okay. Those are the three things you have to do. Now my wife's in real estate, so we've gone with the real estate as our hedge. All right. What we didn't have in that menu was crypto. And I think that you have to have, I'm going to still say gold or crypto because I have so much gold, but you have to have one or the other. And I like what you're saying about crypto. I'm not in crypto. Remember, I'm not in gold for the appreciation. I'm in gold for the alternative. But I don't know how my kids are going to pay down what happened. I think we had to do it to avoid a depression, so I'm glad we did it. But I see the dollar going down. And most importantly, I know that no one wants to raise taxes in this country. And even if we did raise taxes, we still can't afford it. We're not cutting Social Security. We're not cutting Medicare. We're on a collision course which makes me feel great about the gold I own. But I do feel that it's perfectly logical to add crypto to the menu. And now after speaking to you, I think that my kids, when they get my inheritance, won't feel comfortable with gold and will feel comfortable with crypto. And I don't want them, I try to put everything I own on one piece of paper. They won't understand the deposit box at, say, Toronto Dominion, okay? But they would understand crypto. And I have to start recognizing that maybe I am using a typewriter.
Well, here's what I'll tell you is if you take 10% of your gold position, right? So just whatever you have allocated for your inflation hedge bucket, if you take 10% of that bucket, so let's say you have 10% in gold, you just take 1% of your portfolio, right? 10% of your gold.
I have.
Okay. Take 1%, you put it in Bitcoin. That 1% of Bitcoin will outperform the 9% of gold over the next 18 months. Hands down, not even close.
And you want me to actually do let my kids set up the Bitcoin for me?
Yeah, they'll do it, or I'll help you do it. Whoever will help you do it. It's super simple. And what you end up doing is you would end up owning 1% Bitcoin, right, in your portfolio. If it goes to zero, you lost 1%. Not the end of the day, right? Not happy, but not the end of the day.
No, but that's okay. I have stuff in it. I have an international fund that's done terribly until now. And I just said, look, I can't have all my eggs in U.S. basket. I want to have, like I said, I lost the masterpieces to my ex-wife. God love her, some beautiful paintings. And they're Toulouse-Lautrec. They're not going to. But then I have I have the gold. I have the so-called mansion, the real estate equation. Okay. And what I do is I need, and I'm not a paid spokesman for why I need gold or why I need crypto, but I just need something that my kids will understand as a hedge to inflation, and they will never understand gold. And the reason why they'll never understand gold is they think gold's dangerous. It's dangerous because it can be stolen. It's dangerous because they don't want to take it out of the bank. It's dangerous because they may forget where it is. Okay. I mean, let's say people talk about crypto gets hacked or whatever. You know what's really bad is when your kids can't find your gold. And that is, by the way, not unusual. So this is why I am fixated on needing to own crypto because I fear massive amount of inflation and I don't have, gold will do okay. And the houses will do okay. Those are going to keep me running in place as opposed to falling off a cliff. The idea of actually making money, well, holy cow, I'd take a shot at that with 1%.
Think about this. So one thing is important, right, is when you talk to your kids about it, you got to make sure it's Bitcoin, not just crypto in general, right? Because Bitcoin specifically has the inflation hedge things that we're talking about here. The other ones, advantages, disadvantages, but Bitcoin specifically is this kind of inflation hedge type asset. The thing that I would say is that people forget when they hear this, though, it becomes very attractive. 60-40 global portfolio over the last 5 years or so, about 7.2% return, right? Annually.
Right.
If you had taken 1% of your assets and put it in Bitcoin, even with all the crazy ups and downs, everything, you would have taken that 7.2% and gone to 9.2. So it added 200 basis points of performance annually, right? If that 1% had gone to zero, you'd gone from 7.2 to 7%. So 20 basis point downside, 200 basis point upside. So it's literally 10 to 1 in terms of risk reward, right?
Right.
But the key is the standard deviation of risk stays about the same, and the sharp ratio goes up over 20%.
Really?
Because it's a non-correlated asset over long periods of time.
Non-correlated asset. You're so right. Now, let me ask you a very obvious question for you, but not for me.
Okay.
Will my kids understand where it's kept? I mean, is it an app?
So the way to think about this is wherever you buy stocks, the way that your kids are going to get access to that is either through a will or you're going to have to tell them the username, password, all that kind of stuff, right? Same thing here. So if you don't self-custody it, meaning that you actually take physical possession, sovereign possession, what you would have to do is, let's say that you use Gemini, the Winklevoss's thing, right? You can go on, set up an account, got a username and a password, you buy Bitcoin, you can hold it in there, you have a custody solution, right? And then you just got to make sure that your kids or whoever oversees the will or whatever knows how to get access to that account, right?
Now,
so it's the exact same thing.
I'm thinking about this is, I have trust for my kids and they're laddered, when they turn 30, by the time they're 29, 26. And I have stock for them, index funds, because not all individual stocks. And I am thinking that when they turn 35 and turn 40, I hope I'm there, but you never know, right? I would love to have right now some Bitcoin in there, but I'm worried what they'll do is they'll read the will. So I'm like, where's the Bitcoin? What does Dad did? What did he do? He managed something like high and dry. I don't have the code. I don't have the code. I just lost it. Someone hacked it. I want them to feel comfortable when they turn 35 and 40 that I didn't buy them something that doesn't exist.
Yep. Exact same thing. I mean, look, as long as you've got in an account where you want to pass it on, you just got to have them have the information on how to get in the account.
Now, when Square tells me that they'll handle trades, can you keep it at Square, or you really want to use like the Gemini?
You can keep it on any of these exchanges. One of the things that you're just doing, right, just like any other kind of financial institution, is you're just offloading some of the risk to that financial institution. So you've got to underwrite their security, their solvency, all that kind of stuff. The key piece is the Bitcoin ethos, right? The hardcore Bitcoiner is all about self-sovereignty. So just like you say, hey, go get the gold and put it in, your backyard, or put it in a safety deposit box, whatever. Bitcoiners have the same ethos. One of the challenges for people who are older or not as technical is that there's a somewhat technical process to take physical control of a digital asset, right? And so what I always tell people is like, get started by getting off 0% exposure. So get to 1%.
Right.
Hold it in one of these kind of, well-known large custody providers to start. Then
you mentioned that Gemini. I know you don't take any money. Yeah. Gemini is the one that they're in. The
Winklevoss twins. That's their exchange, right? So
I don't want to make fun of. They're actually great guys. They belong to a club that I belong to, and they're incredibly kind and upstanding. And I see them. I don't want to be making fun of them. But
if you tell them that we talked and you're going to buy Bitcoin, they'll be your best friend.
Hey, they like my wife. She's the head of the entertainment committee at the club we belong to. And I need to do this for my kids. I need to do it because they are much more at risk than I am because of what happened. Let's say before this, okay, before February, before the pandemic. Well, I would have said, you know what, the stocks are doing well. I feel they're a good hedge against inflation. There's no inflation. But then everything broke down. And now I know I'm being reckless. See, I was being prudent with cash, okay? That's what I thought. Because you have stock, you have cash. That's great for your kids. Remember, the 29, 26. After what happened during this period, it's not right. I know now I went from being prudent to being reckless. So do I have to go buy them paintings? Again, very hard and subjective, okay? Real estate, again, taken care of. I've taken care of that asset. But I think that they will be, by the time they're 35 and 40, much more comfortable owning not the gold that they have, but the Bitcoin that they have, because they're digital and I am analog. I love that. It's, and look, I have no regrets. That's who I am. And I've loved gold. And there's a lot of people who hated gold. The whole time I've loved it. And I've loved it for exactly what you've been talking, scarcity value. I like the touch of it. But the touch of it is no longer as valuable as the scarce